Hello, I think we are live. Thank you all for waiting. Sorry for the delay, but there were some technical issues. But I see we are live now. Welcome on this our cryptocurrency live event. I'm Adrian from Bitcoin for Beginners, and I will host this event today. By the way, for everyone for who it's still the 31st of October, congratulations with the 10-year anniversary of the Bitcoin white paper, which is obviously one of the most important events in this whole industry. Okay, let me go to screen share. Wait a moment. Wait a moment. Yes. Let me see if it works. Yes, so please check out the disclaimer. This is of course not financial advice and only for entertainment purpose. Let's go to what we are going to talk about today. We are going to talk about the 0x protocol. We're going to explore what is the 0x protocol, what does it aim to solve, how does it work, what is the role of the 0x token, who is behind it, the team, etc. What are some important developments, the pros, concerns, and some final thoughts. So what is 0x? First of all, the mission according to their website is to create a tokenized world where all value can flow freely. It's not an application, so as most of the dApps on Ethereum are, but it's an open source infrastructure protocol. And at its core, it's a universal shared order book for decentralized exchanges and a protocol to build decentralized exchanges with. The protocol itself is free to use to build dApps on top of it. And although the protocol itself is free, dApps that you make on them can be made for profit. It has been a sleeping giant because we never heard any marketing from them. There was no shilling usually. That's because the team put technology first. The price hardly moved right after the ICO pump, and until December 2017, nothing really happened price-wise. And that changed, of course, during the altcoin rally at December 2017. It has been quietly in the shadow, and it has been building its protocol, ecosystem, and network relentlessly all the time. So what does 0x aim to solve? First of all, we have on one hand the centralized exchanges, and those are, we know, very risky, and more are requiring KYC and AML, which is, of course, basically against the purpose of cryptocurrency. So they have become less private, and you don't control your own private keys, and they are a honeypot for hackers. So it's not the best way to save your coins on, but it's some kind of necessary evil. However, they do have great speed, a good user experience, and they have customer support, which of course decentralized exchanges don't have. Decentralized exchanges, on the other hand, are mostly clunky, slow, and illiquid, and they have a horrible user experience. And then we have also the ever-growing amount of different dApps and tokenized assets, and each application requires its specific token. They all need to be manually bought on an exchange if you want to use it on the dApp, which is also not great for user experience and bad for mass adoption for the tokenized economy, because for every different dApp you need a different token, which you then need to manually buy somewhere on an exchange before you can use the dApp. So the 0x protocol leverages off-chain order broadcasting, shared liquidity pools, and order matching to improve the user experience of decentralized exchanges so they can become more liquid, much faster, seamless, or even fully operating in the background of any other wallet or decentralized application. So how does it work on a very high level overview? You have two types of trades that you can do with a 0x protocol decentralized exchange. That can be point-to-point free trades. Those are directly between two parties, and users can send a transaction even by text message, for example, on Facebook or email. And if you then use the transaction on the protocol, it performs an atomic swap. Or you can broadcast an order, and that means you broadcast it to relayers, which are state channels or nodes on the 0x network. And state channels you can loosely compare like the nodes on Lightning Network for Bitcoin. It's essentially a second layer solution that has makers that broadcast the order to the network and takers who fill the order. Off-chain orders are handled in a dedicated or shared liquidity pool order book, which should lead to faster and less workload and lower gas costs on the Ethereum network than the traditional decentralized exchanges do. And then when an order is matched and executed, only then it's going to be recorded on the blockchain. So the process steps are, if you want to sell any token, you can send it to a relayer, which is the market maker, who will then broadcast it to the network's liquidity pool. On the other side, a taker that matches the order will fill it, and then it gets swapped in a decentralized exchange smart contract, and the executed order will be broadcasted to the Ethereum blockchain. And the maker can, if he asked for it in the order process, he can receive a fee in 0x token. With the protocol, you can buy and sell tokens automatically where needed in dApps in the background. That is a possibility of the protocol. So you would not need to manually buy first at an exchange. It can all be handled in the background. Everyone can use the protocol because it's open source, and you can use it to create your own decentralized exchange, your own liquidity pool, or you can share your orders in a larger liquidity pool, or you can become a relayer, which is a node on the network. It has also the possibility to execute the launch and distribution of ICO token sales by leveraging the 0x smart contracts. There is one specific issue with the 0x protocol, which is also quite interesting, and that's the so-called wrapped Ether, or WETH. The point is that on the 0x protocol, only ERC20 tokens can be exchanged and swapped on the network. However, Ether itself is not an ERC standard, so it cannot be transacted as seamlessly as the ERC20 tokens in the protocol's smart contracts for token swaps and decentralized exchange orders. So to use or trade with Ether on 0x, it has to be wrapped first before you can use it, which means that Ether gets locked in a smart contract. This transaction will require a small gas fee only, and it will be swapped for wrapped Ether, which is an ERC20 token for a 1-to-1 ratio. And you can also, if you send the ERC20 wrapped Ether back to the smart contract, you will get 1-on-1 Ether back. Can be used throughout the 0x protocol and supporting relayers for payments and trades as if it were Ether. However, WETH cannot be used to pay for gas. For that, you really need to use the real Ether. So what is the role of the 0x token then? It actually has two roles. It's first the payment of fees for orders that are filled by relayers network. The market maker will receive the fee payment in 0x token, which is then an incentive for them to maintain the liquidity pool. So the more orders are executed on the relayers network, the more fees are required to pay, and the higher demand for the 0x token should be expected. But even more important utility of the 0x token is governance of the protocol development, which means voting on updates. But this is going to be implemented by a transition in phases from responsibility and authority from the core team to the community. The first step is the community veto power. This is a goal for 2019, and this means that the community can vote with a veto against updates that the core team suggests. And then the next phase would be a so-called liquid democracy, which is a goal for 2020. And this means that token holders can have a direct vote on updates, or they can delegate their vote to another token holder, but they also have the possibility to take back that delegated vote and vote directly after all. So you can go back and forth from direct vote and delegated vote, whatever you as a token holder pleases, and that's what they call liquid democracy. So what were the ICO details for the 0x token? There are 1 billion tokens issued in total, and it's a fixed supply. And 50%, so that means 500 million tokens, were sold in the ICO. There was $24 million raised, which means about roughly 5 cents per token. And the price now is roughly 75 cents. So we are at 15 times ICO price at current time. And the other 50% is divided between the 0x team, developer fund, founding team, and the early investors and advisors. The ICO was sold out in about 24 hours to 13,000 new token holders. They spent $0 on marketing, which is quite interesting and unusual in the ICO space, especially last year. They did not do a private pre-sale of tokens, and no ICO financing platforms were utilized. Currently, there are 545 million tokens in circulation, and that means about 420 million market cap for 0x, and they rank at number 25. So a small overview of the price history since launch. They started with the ICO price of 5 cents. The first pump after that was a 10x to about 50 cents, after which it corrected for 60% and stayed for months around a price of 20 cents. And at the altcoin rally, they were able to move from that price to a 12x gain to 237, after which it corrected 84% with the rest of the market. And it went up and down until, well, the price of 75 cents currently. Okay, so who is behind 0x? The team. CEO and co-founder is Will Warren. He's mainly responsible for research and development on smart contracts. They started out with 6 team members, and there are now 25. And they have all different backgrounds, including former Google employees, former traders, people from computer science, people from Apple, Twitter, Facebook, LinkedIn, Dropbox, and Yelp. Advisors include a co-founder of Coinbase, founder of Polychain, co-CIO from Pantera Capital, and a former COO of PayPal. The core team has vouched to stay neutral and independent from network participants. The investors include Polychain Capital, Blockchain Capital, Pantera Capital, and Chinese investment firms as Gen Advisors and FBG Capital. Important developments and roadmap. They already had an alpha version on private testnet early 2017, which was before the ICO. In August, they had their ICO, and trading of 0x token went live then as well. At September 22 in 2017, the first smart contracts were released on Ropsten testnet, and 4 days later, the first relayer went live on mainnet. May 2018, it was announced that Coinbase acquired Paradox Wallet and decentralized exchange, and that is running on 0x. At that announcement, the price of 0x went 35% plus. In July 2018, Coinbase announced that it was exploring 5 ERC20 tokens to be potentially listed, and that included 0x, which caused a 47% gain for 0x. On October 11th, the Coinbase listing went in effect, and that resulted in another 12.5% gain. And currently on the roadmap is further development of the governance protocol, but also because now it only supports ERC20 tokens, and the future should include other ERC token standards as well. And as I said, the next phases of token holders governance will be in 2019, 2020, to become veto power first and then move to liquid democracy. Doesn't end there, and they want to even make governance further democratized and decentralized. But that's still being worked upon. What are some other important developments? Currently, there are 19 dApps that will be or are using 0x, including Aragon, Augur, Maker, and Request Network. There are 19 relayers that will be or are using 0x, and those include ETHFinex, DDX, and Paradox, as we mentioned from Coinbase, Radar Relay, and TokenJar. You can also use 3 trade explorers, including 0x Trade Viewer and 0x Tracker. And what about the competition? We should look at it this way. There is a difference between 0x Project and other decentralized exchanges like EtherDelta, IDEX, and Kyber Network. These are, in fact, decentralized exchanges, but 0x is a protocol that's meant to build decentralized exchanges. So decentralized and centralized exchanges could benefit from increased liquidity by leveraging the shared order book from the 0x network. And so we expect the future for decentralized exchanges to look as follows: that most efficient and most likely outcome will be that there will be one universally shared decentralized order book. And currently, it seems 0x Project to be best positioned to achieve this. Some of the pros: it already has significant partnerships in the form of relayers and people using the network. It has a working product that is used and built upon by large projects such as ETHFinex, which is the decentralized ERC20 decentralized exchange from Bitfinex, Paradox, which is owned by Coinbase, Radar Relay, Augur, Aragon, and Maker. It's recognized as a legit project with good prospects, which is proven by the fact that Coinbase has listed 0x token. And as we all know, Coinbase doesn't list any cryptocurrency very easily. If it's widely adopted in Ethereum, it will be a vital element for the tokenized assets ecosystem because of its shared order book feature. It's an open source project. It's less centralized than most existing projects on Ethereum, which are basically just companies with CEOs that have some token. Because it's an open source project and the focus on its decentralized character, it does that more than most of the existing projects on Ethereum, more or less, like I said before. It launched its protocol before the ICO fundraise. There are more tokens and dApps, which would lead theoretically to more use of 0x, theoretically more demand for 0x token, which theoretically would lead to a higher price of 0x in the longer term. Coinbase listing is extra exposure to the giant Coinbase user base and new users on-ramp that will further support the price and liquidity of 0x token. Some of the concerns is that it's only usable for the Ethereum network. So the success of 0x greatly depends on the widespread adoption of Ethereum as the token platform and the dApp platform, and not be taken over by another dApp or token platform. If Ethereum grows to an ecosystem of thousands of tokens and dApps, 0x will also bring an additional workload to the network, even as those other apps and tokens. Success therefore also depends highly on the success of Ethereum's scaling roadmap, such as sharding, Casper, etc. And another minor point is that only 10% of tokens are vested for 4 years, which means that the other 40% of the total supply, which are not yet in circulation, can be brought into circulation at any given time. Therefore, the dilution of the token supply is entirely unpredictable, which could have some negative effect on the price. Final thoughts. I believe it's one of the most serious and solid, promising projects in the Ethereum ecosystem. It's a vital element if the tokenized essence and dApps economy indeed takes off, makes the user experience more seamless by handling the exchange of different needed tokens for the wide variety of dApps, all in the background of wallet software. 0x has already made significant progress and important achievements. It has already a Coinbase listing, which ensures further growth of the ecosystem and tech potential, the decentralized exchange of Coinbase because of the purchase of Paradox, and a lot of confidence. My personal opinion is that 0x may conquer a top 10 position in the near future. Also, my personal opinion and not financial advice, I can definitely see upside potential for 0x token price in the midterm and longer term as one of the very few ERC20 tokens out there. If you want more information about 0x project, you can go to 0xproject.com on their github.com/0x project, or go to their Reddit r0x project, or you can read their white paper. I see there are no questions in the live chat. So yeah, that's about it. I hope it was helpful information about this project that has been under the radar for a long time, but since the last couple of months, drawn a lot more attention because of the most recent announcement and news events. Join us next week on Reddit, which will be at the normal time again, Wednesday, November 7, 10 p.m. UTC or 5 p.m. CST on our cryptocurrency YouTube. And Kevin will be hosting then for us at bitcoinforbeginners.io. Thanks for watching. Have a great rest of your day and see you all next time. Bye.
Hey, YouTuber.